Hello and welcome. Let's discuss solo 401k versus Vanguard SEP IRA. Which self-employed retirement plan maximizes tax benefits in 2025? So thank you so much for joining. If you're on YouTube, feel free to chat over questions or topics that you wish to discuss. And we'll go through those sequentially. In the meantime, we do want to go over the good topic we brought, which again is solo 401k versus Vanguard SEP IRA. Which self-employed retirement plan maximizes tax benefits in 2025? But yes, it's an open forum as well. So feel free to ask other questions or topics, and we'll go through the questions sequentially. As always, we go live twice per day. Once at 10 a.m. Pacific, and then we're back again, 10 a.m. Pacific, 1 p.m. Eastern, then we're back again at 1 p.m. Pacific, 4 p.m. Eastern. This is the afternoon session. You can see if you subscribe to the channel, the YouTube channel, you'll be able to get notifications of when we go live. You'll be able to come and ask your own questions. So it's a great way to hear what other people are asking, to engage. You can see, for example, tomorrow we'll be back in the morning to discuss, can you really contribute 100% of your salary to a solo 401k, as well as any questions or topics that folks bring. In the afternoon, we'll be back to discuss mega backdoor Roth. Should you transfer to a Roth solo 401k or a Roth IRA? We also want to highlight the resources. We have our community, mysolo401k.net/my community. It's a vibrant community. We have over 30,000 members. There's active forums. We have a library of videos and webinars. So there's a lot of great ways to learn and to share the knowledge. So feel free to start chatting over questions. In the meantime, we'll get into it with our good topic of solo 401k versus Vanguard SEP IRA. Which self-employed retirement plan maximizes tax benefits in 2025? The presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So if you were to take a look at Vanguard's website, you could see that they still offer a SEP IRA for self-employed individuals. They got out of the solo 401k business last year and sold off the business to a census. So if you look for an individual 401k on Vanguard's website, they're going to take you over to a census. Now, most customers we find are going to prefer a solo 401k versus a SEP IRA. And there's a lot of good reasons, and whether that's a SEP IRA at Vanguard or even somewhere else. So we've got a good chart here that shows some of those top reasons. So let's take a look at this. Let's make this a little bit bigger. So number one would be contributions. So with a SEP IRA, the only type of contribution that you can make is an employer contribution. So that's going to have a lot of important consequences, because unlike a solo 401k plan like our plan, you're not going to be able to make any employee contributions, right? You're not going to be able to make any more mega backdoor Roth contributions, because the way that you make a mega backdoor Roth contribution is by making what's called a voluntary after-tax contribution, which is a type of employee contribution. And like I mentioned, SEP IRAs only allow for employer contributions. So that's going to really limit the type of contributions that the individual can make. And for most people, the vast majority of people, it's going to limit how much they can contribute to the SEP IRA, because you're only going to be able to fill up that employer bucket. So with the solo 401k, you can not only fill up the employer bucket, you can also fill up the employee bucket. You can also fill up the mega backdoor Roth bucket. So that means that it's going to be much easier, looking at our last item here, to maximize contributions to the solo 401k versus the SEP IRA. In other words, you're not going to need as much income to be able to hit your contribution goals, because you're going to be able to make those employee contributions. You'll be able to make the employer, just like the SEP, Plus, you're going to be able to do the mega backdoor Roth. So even for those that are just focused on making pre-tax contributions, the ability to make those salary deferrals is going to make the solo 401k that much more attractive. So we've got a contribution scenario teed up just to paint the picture. So let's assume that and this is coming from our online calculator. If you go to mysolo401k.net, under Learn, click on Online Tools, and that'll take you right to the calculator. So you can see, for example, we've got Jane here. Jane is age 55. Jane has an S corporation through which she operates her business. Jane has $100,000 of W-2 wages from her self-employed business. So if Jane were to set up a SEP IRA at Vanguard, well, the only type of contribution she's going to be able to make is the employer contribution. So that's going to be this green bar here, which is 25% of her W-2 wages, or $25,000, and that's it. Whereas if she were to set up a solo 401k, she's going to be able to make the employee contribution, 100% of her wages, dollar for dollar, up to $23,500, plus an additional catch-up contribution because she's over age 50 of $7,500 for 2025, and then still do that employer contribution. So that's going to allow her to make $56,000 in pre-tax contributions to the solo 401k, which obviously greatly exceeds the only $25,000 that she'd be able to contribute to the SEP IRA. And this doesn't even touch on the ability to make mega backdoor Roth contributions, because if she has a plan like ours, on top of that, she'd be able to make additional voluntary after-tax contributions all the way up to $77,500. So the difference between the 56 up to the 77,500 for 2025, those voluntary after-tax contributions would go into a separate voluntary after-tax account before they get moved over either to a Roth solo 401k or Roth IRA. So now that takes her contribution amount all the way up to $77,500, which is more than 3 times the amount that she was able to contribute to the SEP IRA. So from a contribution perspective, it's just overwhelming, right? All right, so we might have a technical difficulty here. So got a little blip. Looks like we lost connectivity. Sorry about that little technical difficulty. Thanks for your patience. So, though, as I mentioned, back to Jane, she's going to be able to contribute so much more to the solo 401k versus the SEP IRA. So it's a huge advantage, right, from a contribution perspective. Other features of the solo 401k may also be attractive to her. So, for example, she's going to be able to take a loan from a solo 401k, at least with our plan. Our plan allows for solo 401k participant loans, where one cannot take a loan from any type of IRA, including a SEP IRA. So that would allow her to access those funds. It could be for an emergency purpose or really any purpose whatsoever. It's not going to be considered subject to taxes or penalties as long as it's properly documented as a loan, and we prepare the loan documents, as well as paid back according to the payment schedule. And we prepare the payment schedule. So the payment schedule is going to be payable in either monthly or quarterly payments, equal payments of principal and interest. The interest is prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. Other features, and of course, that's going to apply to the Vanguard SEP IRA too, right? Vanguard SEP IRA is not going to allow for the loan. Vanguard SEP IRA is not going to allow for the mega backdoor Roth or the employee deferrals. Vanguard's not going to allow for investing in alternative investments, right? That's another popular use case for our customers is the ability to invest in crypto, real estate, private placements, notes, precious metals, all with checkbook control, because the rules are different for a self-directed IRA. Even if one were to set up a self-directed IRA, SEP IRA, obviously not at Vanguard, but through some other specialty company that does allow for investing in alternative investments, they're not going to allow for checkbook control because the rules are different for an IRA. You have to have it at a third-party custodian or specialty trust company. Whereas with the solo 401k, the self-employed person who is the trustee of the plan can have direct checkbook control over that account, which makes it very easy, which is important, right? Because now the person has direct checkbook access, can access the funds quickly, take advantage of investment opportunities. And then lastly, the tax credit. So setting up our plan will make the self-employed business eligible to claim $1,500 in solo 401k tax credits. That's $500 per year for 3 consecutive years, which is going to more than cover our fees for the first 7 years. Whereas that tax credit, it's not available to a SEP IRA. So it's not going to be available to the Vanguard SEP IRA account holders. All right, wonderful. Well, thank you so much for letting us go through those good topics. We got a few other topics to touch on, but before we go to that, let's go over some questions. Thank you for bringing the good questions. My S Corp brought in approximately $160,000. My personal W-2 was $115,000. I would like to contribute about $20,000 pre-tax to the solo. Can I contribute from either employee or employer funds? Pros and cons of each option. So really it's neutral in terms of either. So based on those numbers and assuming that the individual didn't make contributions to another plan, like a day job plan, they'd be able to contribute 100% of those W-2 wages, dollar for dollar, up to the applicable limit. For example, $23,500 for 2025. So that's certainly within the $20,000 goal. That can be made as a pre-tax contribution to reduce the taxable income for the year for which the contribution is being made. In addition, or instead, the contribution could be made as an employer contribution, which would also be made as a pre-tax contribution. Now that, from a reporting perspective, if the business is taxed as an S corporation and the individual makes a pre-tax employee contribution, that's going to reduce box 1 of the W-2. So it's going to go down by the amount of that pre-tax employee contribution. Whereas if the individual makes a pre-tax employer contribution, that's going to not reduce box 1 of the W-2. Instead, that's going to reduce the taxable income on the employer's return, because that's going to be a business expense. It's going to be a deductible expense on the employer's return. It's going to be over on that 1120S, for example, in the case of a business tax as an S corp. It's still going to benefit the self-employed individual because the income that they receive as the owner of the S corp is going to be reduced by the fact that there's more expenses because a contribution was made. Thank you for that good question. So please feel free to chat over more questions. Are you considered an employer as sole proprietor LLC? Can you contribute to either solo 401k and SEP IRA employer portion without having S corp? There's no requirement to have a formal legal entity in order to be eligible to set up a plan. The key is that you are reporting earned self-employment income, and in the case of a solo 401k, have no non-owner, non-spouse, full-time W-2 employees. In that case, you can make both the employee and the employer contribution. In the words of the IRS, you're both the employee and the employer. So that's why a solo 401k has the highest contribution limits for any defined contribution plan, because you can make all the different types of contributions. You can fill up all the different buckets. But yes, there's not going to be a requirement to have an S corp to set up either a solo 401k or a SEP IRA. But as shown here, most clients find that it's better to set up a solo 401k for all the good reasons we discussed. Thank you for bringing the good questions. So please like the video if you found it helpful on YouTube. That helps us get the word out. Please subscribe so you get notifications of when we go live, plus all the good content we like to bring. For example, we'll be here this Friday with the longer form content. We'll be talking about how much income one needs to be able to maximize contributions. So in other words, sort of that magic number of income that you need to be able to maximize contributions. And here's some slides talking about eligibility, to the point that you don't need to have a separate entity in order to be eligible to set up a plan. Now, we do want to highlight that there's still time to set up a solo 401k in 2025 and make contributions for 2024. So of course, if you signed up with us before the end of last year, or you had set up a basic plan somewhere else that you now want to upgrade to our plan before the end of last year, you would have preserved the ability to make all types of contributions for 2024, all the way up until the business tax return deadline, including any timely filed extension. And this goes to the question that just came across. So now, if the plan wasn't set up either somewhere else or with us before the end of last year, there's still time to set up a plan here in 2025 and make contributions for 2024. Now, the types of contributions that can be made will depend on how the business is taxed. So if the business is taxed as a sole proprietor, one could still set up a plan and make all types of contributions for 2024, as long as they did it in time to make at least the employee contributions by April 15th. Otherwise, they could still make the employer contributions or the voluntary after-tax contributions by October 15th, as long as they filed a timely extension for that business tax return. In other words, as long as they filed a timely extension for the 1040, since that is effectively the business tax return in the case of a business that's taxed as a sole proprietor. Now, in terms of the other business types, whether someone's a partnership or an S Corp or a C Corp, if the plan wasn't set up before the end of last year, in other words, the individual didn't sign up with us before the end of last year, or the individual didn't set up a basic plan somewhere else, like at Fidelity or Schwab before the end of last year, that they now want to upgrade to our plan, then it's too late, if the business is not taxed as a sole proprietorship, to set up a plan now in 2025 and make the employee contributions for 2024. But there's still time to set up a plan here in 2025 and make employer as well as voluntary after-tax contributions for 2024, as long as the individual sets up the plan in time to make those contributions by the business tax return deadline, including extension. So let's assume that the business is taxed as an S Corp. So as long as they were to set up the plan, let's say they filed a timely extension for that S Corp tax return, the 1120S, well, they would have until September 15th to set up the plan and make those employer and or voluntary after-tax contributions for 2024. Well, great. We appreciate all the chance to discuss these topics as always. Again, please subscribe if you found this helpful. Please like if you found this helpful. Please continue to engage, whether in our community, mysolo401k.net/my community. Feel free to use our AI. We have the industry's first AI. You can access and use it for free at solo401k.ai. It's a great way to find answers to quick questions and resources. So thank you so much for the engagement. We do appreciate it. All the best, everyone. Take care.